What is Forex trading? Today's video will cover the fundamentals of Forex trading. What are Forex markets? What are the advantages of Forex trading, etc., and how can you make money through Forex trading? So let's first clarify what Forex trading is. The buying and selling of currencies is the simplest definition of Forex trading. Currency exchange rates fluctuate frequently, and Forex traders try to profit from these changes. They purchase money at a discount and then sell it at a premium. AK's study of a Forex transaction. Let's say a trader thinks the euro will gain value against the USD. The USD will weaken in relation to the euro. To put it another way, the trader invests $5,000 in currency and buys the euro to US dollar at 12,500. Forex markets. Currency exchange. The Forex market is a place where people can buy, sell, trade, and speculate on different currencies. Given that its daily turnover exceeds that of the futures and equity markets put together, the currency and foreign exchange market is regarded as the largest financial market. The Forex market enables participants to buy, sell, or exchange currencies for both hedging and speculative purposes, including banks, funds, and individuals. Institution that facilitates currency exchanges between two nations. Due to the fact that trading between different currencies, such as the euro and the dollar, each constitutes a market, foreign exchange markets are actually made up of many different markets. Benefits. You can gain a lot of advantages from Forex trading. But in order to profit from Forex trading, you must be extremely knowledgeable about the sector and the global economy at large. Listed below are a few advantages of Forex trading. Number 1. Strong liquidity. Due to its size, the Forex market has a high level of liquidity. More than $5 trillion in transactions occur every day on the currency market, which is bigger than the futures and equity markets put together. In a trade, you can never become stuck. Therefore, liquidity in the Forex market refers to a currency pair's capacity to be bought and sold without substantially altering its exchange rate. When a currency pair can be bought or sold with ease and experiences a lot of trading activity, it is said to have a high level of liquidity. Number 2. Hourly market. The foreign exchange market is open every day, from Australia's Monday morning opening to New York's afternoon close. You get to pick the hours you want to work. Because there is such a high demand for certain currencies, traders from all over the world are constantly creating and filling orders for them. As a result, the Forex market is open around the clock. This implies that traders can engage in non-stop Forex trading throughout the day. Number 3. Without a set lot size. Your own lot size is up to you when trading spot Forex. Trading can now be done at traders' convenience with a small account. Number 4. Forex is a decentralized markets, like the foreign exchange. Forex market don't have a single physical location where investors can buy and sell currencies. Forex traders can check currency quotes from various dealers around the world on the internet. Number 5. Easy sales in the short term. How you can earn money with Forex trade. First and foremost, you must remember that Forex trading is not a quick way to become wealthy. It takes a lot of patience and understanding to trade currencies. Numerous market and economic factors, including exports, imports, crude oil prices, market drivers, etc., affect foreign exchange rates in the Forex market. An investor can profit from an increase in the value of the quoted currency or from a decline in the value of the base currency. If you are an exceptionally skilled currency trader or a hedge fund with deep pockets, Forex trading could make you wealthy. However, for the typical retail trader, Forex trading can be a difficult path to massive losses and potential destitution rather than an easy path to riches. Here are some recommendations for traders and investors on how to succeed in the Forex market and stay competitive. 1. Learn the basics of Forex trading. 2. Find the right Forex broker. 3. Begin with a demo/practice account. 4. Start with small investments. 5. Maintain a record. The trading goes much deeper and involves the application of several techniques, such as Forex futures and Forex options, swaps, so do not assume that it is as simple as explained. Give us a thumbs up and subscribe to our channel if you enjoyed our video.